Hello and welcome back to Cryptolization. In this video, we'll be discussing one of the most important tools in the financial markets, indicators. We'll explain what they are, how they can help traders make profitable trades, the importance of time frame when using indicators, and the top 5 indicators for crypto trading. Finally, we'll provide you with some tips on how to utilize these indicators to make profitable trades. What are indicators? Indicators are tools that traders use to analyze market data and make predictions about future price movements. They are based on various mathematical calculations and can be displayed in a variety of ways, such as lines, bars, or histograms. How do indicators help traders make profitable trades? Indicators can help traders make profitable trades by providing them with valuable information about market trends and potential price movements. They can also help traders identify potential entry and exit points for trades. The importance of time frame in indicators. The time frame you choose when using indicators is crucial. Different time frames can provide different insights into market trends and price movements. For example, a short-term time frame may be useful for identifying intraday trading opportunities, while a longer-term time frame may be better suited for identifying long-term trends. Top 5 indicators for crypto trading. 1. Moving averages. Moving averages are a widely used indicator that can help traders identify trends and potential entry and exit points. 2. Relative Strength Index, RSI. RSI is a momentum indicator that can help traders identify overbought and oversold conditions in the market. 3. Bollinger Bands. Bollinger Bands are a volatility indicator that can help traders identify potential price breakouts. 4. Ichimoku Cloud. The Ichimoku Cloud is a comprehensive indicator that can help traders identify trends, support and resistance levels, and potential entry and exit points. 5. MACD. Moving Average Convergence Divergence. MACD is a trend-following momentum indicator that can help traders identify changes in trend and potential entry and exit points. Tips regarding these top indicators. 1. Use multiple indicators. Indicators should never be used in isolation. 1. Instead, traders should use a combination of indicators to confirm potential price movements. 2. Consider the time frame. As we mentioned earlier, the time frame you choose is crucial when using indicators. 2. Make sure you choose a time frame that aligns with your trading strategy. 3. Practice using demo accounts. Before using indicators with real money, it's a good idea to practice using them with demo accounts to get a sense of how they work and how they can be used in your trading strategy. 4. Use indicators in conjunction with other forms of analysis. Indicators should not be the sole basis for your trading decisions. 4. Instead, they should be used in conjunction with other forms of analysis, such as fundamental analysis. That's it for today's video on indicators in financial markets. We hope you found it informative and useful. If you have any questions or comments, please leave them in the comments section below. And don't forget to subscribe to our channel for more videos on crypto-related topics. Thanks for watching, and we'll see you in the next video.